All right, Tim, we're on to segment number 15, after-tax contributions. Talk to me about code 415.
415, that's another exciting code section, isn't it, Mitch?
Woo-hoo, get ready to talk about that danged old code 415. Love talking about that.
Fun stuff, fun stuff. So 415, and let's take a step back. Remember at the beginning whenever I was talking about the different buckets, if you would, the different threads. We got the 401k, we talked about those contributions. We had the profit sharing, we talked about those. We have the rollovers, we talked about that. Now we're going to talk about after-tax contributions. And this is a neat little loophole that says if you've maxed out your 401k contributions, if you've maxed out your rollover contributions, if you still have more money that you can contribute, you can take it out of your personal savings account and put it inside the retirement plan to grow tax-free and protected from creditors. Now, where's 415 come in? 415 of the tax code says what the total maximum contributions you can make to a retirement plan are for any given year. And that limit is going to be the lesser of $56,000 or the total of your profits or the total of your salary. That's the 415 limits. So how does this work in with the after-tax contributions? Let's go back to before where we talked about I made $50,000 of profits in my sole proprietorship. I could put in $19,000 as a 401k contribution. I could put in $10,000 as my profit sharing contribution. That was a total of $29,000. But I made $50,000. So if I had the difference between $50,000 and $29,000, what's that, $21,000? Mm-hmm. If I had $21,000 lying around in my personal savings, I can take that $21,000 and I can push it into my retirement plan. It's pretty cool, isn't it?
Yeah, because now it grows tax deferred.
Now it grows tax deferred, but Mitch, I'm looking at you and I can tell that you're the type of man who's not happy with just tax deferred.
No, I'll probably Rothanize it at some point and just make it to where it's tax free after that point.
So this is the cool thing. This is after tax money. We don't get tax deductions for putting this money. This is money that's already been taxed. So now we're going to push it
in. So it's Rothanized when it goes in then, right?
We're going to Rothanize it as soon as it goes in.
Oh,
so how cool is
after tax money?
Yeah, so you get all these people talking about backdoor Roth IRAs, oh, I put $5,000, oh, I put $6,000 in. This is a way how theoretically we could plow $50,000 in via a Roth contribution. So these after-tax contributions, fantastic tools. Nobody uses them. Nobody understands them. They give you that tax-free growth, and you get the asset protection with the money too.
Well, this is the reason why the wealth are wealthy. They understand these things. It's actually the wealthy that make these laws. They just don't hand out a memo to us.
Yeah, well, they don't want people to know.
They make it for themselves. There's these stacks and stacks and stacks and stacks of legislation they do every year. I mean, mountains of paper. Mountains. And in there is these little, what do you want to call them? Loopholes, nuggets of gold. Yeah, I wouldn't even say loopholes because they're not loopholes. They're law.
Yeah.
They're law. This is completely legal. But they don't send out a memo to you. They're not going to teach you this, for heaven's sakes, in college. Why would they teach you about learning how to live tax-free in college? I don't know what they teach over there, but anyways, they're not teaching this stuff. So you got to come to places like this or become a student of these kind of conversations, because this is really how the wealth are getting wealthy or wealthier, is because, again, it's not just about making the money, it's how much can you keep. How much can you keep of the money that you make? Imagine if there was no taxation, how easy it would be. Well, you can get yourself in that situation in a modest amount, a majority amount, or a total amount of your funds in some cases.
Don't even imagine you can do it, no taxation. You can do it.
Well, I mean, I know because I know people that actually live tax-free for years. They just set themselves up a long time ago and got in a different frame of mind and decided that they were going to run their life a certain way, and that certain way gave them a huge financial advantage over the rest of the world because they did exactly what the law said, and they got to live tax-free. Why does the government want you to have these tax deferrals?
Well, think about it. If you haven't provided for your own retirement, who's going to have to support you? The government. So they want to have these incentive programs so people take care of themselves and start building up for their own retirement, because otherwise everybody's, I'm not even mentioning Social Security. I mean, that's a fiasco and all that other stuff, but the government's going to have to support everybody, and they can't afford to do that. So they give these tax benefits to everybody.
Yeah, so they're giving these tax benefits so that hopefully a certain amount of us will be able to take care of ourselves in our older years. And then I guess they figured some people are going to zero out for a long time, but that'll be like this many people. You know what I mean? And I guess it's all calculated in. But it is possible to zero out. And I know people that zero out.
I don't think they even think of that. I really don't think that Congress has enough foresight to think that people are going to utilize the rules as much as they can be utilized.
Well, maybe some of these people did go to the extreme that no one ever calculated, but there's nothing illegal about it.
No.
And there's nothing wrong about it. It's just the way it is.
You know, the GAO, Government Accounting Office, they came out with a report, I think it was 2-3 years ago, giving a complete blueprint on how you can take an IRA from nothing, actually I think it was $4,000, up to $80 million in the space of a couple years. And they gave a complete blueprint. Guys, governments is talking about it. Why shouldn't you be able to take advantage of the exact same thing?
So they're putting out the blueprint.
Yeah, they're putting out the blueprint.
How can we get our hands on that blueprint?
All you have to do is ask me, Mitch, or send me an email, and I'll be more than happy to send it to you.
All right, so you want that blueprint, get in touch with somebody. Get in touch with one of us. I'm sure there's plenty of contact information around here somewhere. We're going to wrap this segment 15 up. We're going to go to segment number 16, which is investment limitations. I think that's probably an oxymoron, but I'm not sure.